I've never been happy with the 20% dilution. I would rather see it at like 10% or less than that. The only real protection you can have as a startup founder in your business is to be successful. If you're not successful, there's a lot of ways investors can exert their control.
Ready to go? Karri, I am so excited for this, dude. I've wanted to do this since we first started working together, so I'm thrilled that you joined me today. Thank you for joining me.
Thanks for having me.
Now, I was chatting to Miles at Accel beforehand, and he said, you've just got to start with context. And so I don't want to do like how did you come to found Linear? He told me I had to ask about potato farming in Finland. Why?
I think this came to be I think Linear also came to be from like my frustration. So I think like my frustration living in US or in California in the last decade is that the potatoes here are not very good, or there isn't that much of a variety of things. So when you go to a grocery store, you usually have 4 different kinds. You have the large one, the golden one, the small one, and like a red one. And like growing up in Finland, that's not the case. Like those are like the main categories, but then within these categories, you might have different kinds of varieties. And some of them are more like seasonal, and some of them are more specific to a region in Finland where they're grown. So during summer in Finland, you go to a grocery store, there might be like 5 different kinds of like different varieties of the same kind of potato, like the same category. And then like some of them might be picked this morning and they're like really fresh, and the taste and the texture is very different. They're like very buttery, and the potato flavor is much more stronger. Like even if you just boil them, you can taste a lot, versus like if you boil normal potatoes, I think like you get on a grocery store, they don't generally taste that much anything. So I'm just sad that like there isn't good potatoes in the US, so I at least haven't been able to find. So I like going to Finland in the summer to buy some of these potatoes, but I've been also like growing my own. We have a little cottage and it has some space to like farm things. So I've been like growing my own as well.
I've never met a potato nerd. That is the nerdiest description of potatoes I've ever heard. All I say is I hope you didn't use that when you were dating your partner. Clearly you didn't, because it converted well. But moving the potatoes forward, before Linear, you worked at Airbnb and you worked at Coinbase, 2 of the most transformative kind of product orgs in the business. When you think about like impact, which one had a bigger impact on how you think about product?
With Coinbase, I was there much earlier. So it was, when I joined, it was only 12 people or so. And then when I left, it was less than 100 people. So it was more of the early stage experience. I think the main thing I saw there and learned there, that how much you can do with very small teams. A lot of the features we built, and they were used by all kinds of companies and very large groups of people, or very much revenue went through them, and those features were maybe built by 1 person or 2 people or 3 people. There was, like, for example, Coinbase Exchange, which is the trading platform they have, that initially was built by 1 guy. Like he was in a room and then he was building it for maybe 6 months, but he was built by 1 guy. And then when it went live, it already like transacted maybe millions or tens of millions of dollars. And today it's probably transacting like billions of dollars. So that was like one lesson I learned there. And I think with Airbnb is much more about I think Brian Chesky is very driven or passionate about the experience. Like, how does this feel? And like how we want the company or the product to feel. That was like really great to see, that you can run a company that way, that you can actually focus on the experience and you don't have to focus on some of the other things like metrics or I don't know, something else that people tell you to, but the experience is the most important thing you can focus on.
Can I push you? Which one's a better leader, Chesky or Armstrong? Come on.
Yeah, I don't know if I want to answer this. And again, I would say they're very different kind of personalities. I also think that they're probably like a really good fit for the company they're operating.
If both of them were to start a company again, and you have one angel check, which one would you invest in?
If I really had to choose, I would really choose Brian Chesky, because I think he's really this, I don't know, power of nature that he can thrive through anything. I think Brian Armstrong is as well. But I think like if you put Brian Chesky to do something, like he will really do it, and he will have all the energy to do it. So I would bet on him.
Are you kidding me? Have you seen his weightlifting days? This is a man who, when he sets his mind to something, he fucking goes for it. Unbelievable. So totally understand and get you there. Listen, he was the inspiration behind Founder Mode. I have to start giving your answer there. I had Zach on from Plaid, and he was like, actually, I think Founder Mode is going to be incredibly dangerous for a cohort of founders, and it's going to allow for a lot of bluntly bad behavior. How do you think about and assess Founder Mode, given your context with Brian, and also now being one of the hottest founders in the Valley?
Yeah, I mean, I agree with Zach that it can be dangerous, or I think the essay itself, it's not very clear what it means. And like the standard advice is like you hire really good leaders in the company and then you let them do the things. I think that the thing with the Founder Mode, I believe, was about that you should do that. You should hire some leaders. It's not that like as a founder, you should be operating, like doing everything, operating everything by yourself. But you shouldn't also sit on the bench while everyone else is playing on the field. But you are allowed as a founder still be on the field. You can still play some roles in there, like some position there.
You said about kind of sitting on the bench when someone should maybe be on the field. If I were to push you and say, where did you sit on the bench too much and you should have been on the field more?
The first or the last 2 years, I was maybe too much on the bench when it came to like the go-to-market function and the marketing or the sales function. And now maybe like the last 6 months or the last year, I've been focusing on it much more. We have weekly chats about it with the leadership team there. I think the reason for that is that my background's in design, and for example, Airbnb and Coinbase, they weren't very like go-to-market driven companies. They're not sales cult, like you didn't have salespeople in the company. But when you are building more of an enterprise business and selling to enterprises, the go-to-market function can be more complicated, or it can be more nuanced, or there's something more in there. And to me, I have to learn about it. I have to learn about these things, and in order to be more effective there.
We mentioned kind of growth and different periods of growth there. I have to start. You said something to me before the show about quality growth over hypergrowth. What do you mean by quality growth, and how does that differ from hypergrowth?
So with Linear, we been growing much more this sustainable way, or like I like to call it more like a quality growth way. And what it means that the growth is based on something real that is working in the company, and it's not something that is overly artificially juiced, or it's not like the growth is on steroids. It's like the growth is coming from the fact that you go to the gym, and that's more sustainable than using steroids. You can maybe not. You shouldn't use steroids, but maybe you could. Some people might use it at some point, but it's not sustainable. So similarly, I think startups, we have this culture of growing fast, scaling fast, doing growth hacking, trying to hack our way to the growth. And to me, it feels dangerous because it's artificial. Some companies, they put a lot of money into their growth, and they can get that money, they can get the growth, but they're also spending more than they're making. And eventually, that function just doesn't work. Like you need to keep raising more and more money, and it might be really hard to actually turn the function now to actually make money versus like spend it. So for us, like the quality growth has always been the product, that we almost spent no money in marketing. We didn't even have sales for the first 3 years. That we just wanted to see that the growth is coming from the fact that people find our product better than anything else out there, and they will pick it up and they will buy it. And that's like what the real growth to me means, and not something like you spend your money on.
Founders listening will be going, great, I get it, but I need to raise money again. I need a Series A, I need a Series B, whatever that is. I am looked at in a comparative stack of companies, and if my growth rate is 2x, and there are companies who are growing 4, 5, 6x. AI revenues are unbelievably different to what we've seen before. I'm just not going to raise money. So like, it almost feels like quality growth is a luxury product, and I need hypergrowth because that's the only way I can get the next round. What would you say to that thought process?
Well, I mean, I think that's exactly right, that you need the growth to raise the round. But there is the other option, if you just think about this problem, is that, like, what if you don't need to raise the round? Like, what if you can sustain without raising a round, or you raise some round and then you just try to focus on making the business function work, that actually try to make money and not spend that much money. And then you're no longer kind of tied to those metrics because you don't need to raise. And if you can get to profitability, then you don't necessarily need to raise ever again. You can if you want to, but you don't have to. I think it definitely depends on your market dynamics, how fast, like how hard or fast you need to go. But that's, I think, like what I advise founders is that you should think about what game you're playing, like what market you're entering, what do you need to do there, what's the dynamic there. Like our market, it was kind of clear from the beginning that the way we win in this market, it's not like a fast moving market. There's basically one solution every company uses, and it's been there for 20 years, and it's kind of the legacy solution. It seems like nothing has happened in the last 20 years. I don't think there's a lot happening in the next 5 or 10 years unless we make it happen. So for us, it creates this market where we think it's not necessary to go the fastest as we can, but we actually need to focus on being the best as we can. And I think there's that cost of trying to grow too fast or growing too fast, is that you will the cost there, or what you sacrifice, is the quality, or the like not actually focusing being the best in class for the product.
And for any founders listening, do not listen to Karri. You should absolutely get on the VC treadmill. Otherwise, I will be unemployed. But no, I completely agree with you. I think the thing that's so interesting, you mentioned kind of, bluntly making money from your customers as well there, and being more proactive in doing so earlier. You made money year one, you were profitable year two. How do you think about shipping like feature products that can be monetized quicker versus the founders that say, well, that's fine, but like I need to do a platform approach, and actually it's not possible to do that really until 24 months in?
I think startups should always pick like a more focused angle, or like some kind of niche that you hit first, like some kind of smaller group of people that you can serve as soon as possible. And even if you have this idea of a platform, like you might also find some use case which you can do today with a simple feature that get people into that platform, and you can start building the platform with them. So I don't think it's like this kind of binary choice that either you build a platform or you build this like feature product. I think there is always a way to focus what you're doing to some group of people, build something really great for them, and then like expand from there. And I think generally that's the right approach for any startup. You shouldn't try to boil the ocean. You need to just boil the pot and like get someone in the pot and cook with them.
I think the biggest reason why companies I work with don't find product market fit is founders get really nervous pre-launch. They expand the ICP too much, and then it doesn't resonate with anyone. They don't get 1,000 true fans, and no one really gives a shit about it. And to your point, exactly, like find the 1,000 people who will really care and pay and love it, and expand from there. Totally agree with you and get you there. Profitable in year two. This is a very rare thing, Karri, being profitable. What is wrong with you? My question to you around that is, the counter argument will be, why didn't you spend more on acquisition? Like, have higher CACs, the retention's great, people love linear as a product. Just pay more and get more people faster.
I mean, there again, like it goes to the strategy we have, is we want to be the best tool, and there's certain beliefs what we think get us there. One is that the team should be more like smaller and more focused. And if I look back to my different jobs in different companies, I always felt that the smallest teams always made the best results. Not all the time, but usually when you put this special team together that are really talented, like maybe it's only 3 people or 5 people or something, they could make really big impact in a company very fast. And that's something we believe in. So one of the main sources of expenses obviously is hiring. Like if you have a large team, you spend a lot of money every month. And we took the different approach where let's just try to find highest quality people we can, and then not grow the team too much because it can cause additional problems. It can dilute the culture. You spend more time managing things, and like you have to kind of onboard people more. So generally our growth rate on the team size has been about 2x per year. So part of that is like hitting profitability is that the revenue grew faster than we were able to hire the team. And then like when it comes to the marketing expense or some other expenses, part of it is that I want to see that the growth is there even without the spend. And then secondly, the product hasn't been ready for everyone from the day one. Again, like going back to the focus of like finding your first group of customers, like our first group of customers for startups, like small startups, early stage startups, those people don't even look at ads. Like I don't think they pick products because they see ads like out there somewhere. They pick products because they hear about it from their friends or like other founders. So I think the word of mouth and connecting with those founders is much more important than spending money on ads. So by the time of Series B, we only had spent like $30,000 in advertising, and 30,000 I think went to your podcast at some point, and then it went to another podcast. So we basically did 2 podcast sponsorships with that money and nothing else. But now we are spending a lot more money in advertising because now the company, like the products, is actually working for a wider audience, and it's working for larger enterprises, larger companies. And those people we need to influence them a little bit. Like they need to see that we are there, we are around, we are like a serious company. So there, I think the advertising makes more sense. But in the beginning, I don't think it made sense.
Do you wish you'd gone more enterprise earlier?
The way I look at this is that I see that you kind of have the product, and you have marketing, and then you have sales. And in order to move to the next segment of the market, each of these functions kind of have to elevate at somewhat equal pace. So when you're selling to enterprises, obviously you need to have the sales team to like know how to do that. Like how do you work like an enterprise account? How do you talk to people there more, and like how do you influence them? And then like the marketing has to be there, that people have to know about you. They're not gonna engage in a sales process if they've never heard of you and they don't understand like what you do or why is it better or something. And then the product has to be there that like eventually if they actually buy the product, it actually has to work to them well. We started getting some of these enterprise customers like maybe a year ago, like just before our Series B. And that was kind of the story there. Is like, hey, we are seeing now that enterprises are buying this product. It just doesn't happen very often right now. It's a little bit special. Companies do this, that they see the value earlier than some others. And now 1 year later, we have the switchers every month. So it's like it has gained a lot of traction, but we needed this year to figure it out and improve the product and get few of those customers in so we could see like where the product breaks down, and then we can fix it. And then we can see like in our sales conversations, what do we need to do on the marketing side? And then on the sales side, we need to obviously see like what do we need to do on the sales side. So I think there's this like, you need to kind of keep elevating each of these functions, and you can't just jump in and like hope for the best.
You mentioned the Series B there. I'm intrigued. When you're profitable, why raise another round? Why dilute more?
I think it's still something like we are definitely, I would say like I'm still figuring out, and I've been talking to people about this, like, do we need to raise more money? Like, is that like what happens? And I think there's some basic reasons. Like one is that it is useful to mark up the company every now and then. Like we raised Series B maybe almost 3 years after the Series A, and it's annoying when you talk to candidates and you say like you're a Series A company, and then they like they think that like you're technically a Series B a company, but technically you're more like Series B company in terms of your revenue or something. And then like there's this like disconnect of, hey, we can't give you like 1% of the company like a Series A company could, because we are just like much further along. So there's this like disconnect between I think like the equity value. And so marking up the company is useful. You can do it other ways too. You don't necessarily need a round for that, but it's one function. I think there's also like signaling with the customers as well that you're no longer a Series A company. That's like, if you're a Series B company, it sounds more serious, because there is a lot of like seed or Series A companies, but not as much Series B companies.
How impactful is having Sequoia for hiring?
Let's say like we didn't have Sequoia or any of like we didn't have any VCs, we would be just bootstrapped. I think like what you're signaling with VCs or Sequoia is that you are really aiming high. Like you have a high ambition, you want to make this big. And for the candidate, it can feel like I don't think it's a major thing that people pick companies just because they have this VC invested in them. But it can be one of those like safety things that at least the company is not horrible. Like it's not like terrible what they do because someone believed in them and like a tier 1 VC believed in them. So I have like a little bit of signal there. So I do think it is meaningful. I wouldn't say like it's the main driver, but I think part of this round raising a round is about the signaling with the candidates and the markets. And then I think there's each time we raised a round, there was definitely like some level of uncertainty. Like with the Series B, we raised it at the time when the market was quite bad or looking to be quite bad. Like companies were doing layoffs, they were shutting down. It was hard to tell, like, is it going to get better or worse? And it's one of those like safety things that we want to be here for the long term and we want to be a sustainable company. So raising a round now versus waiting until we are the market is really tanked and everything is bad. And we have to then go out there to raise because our revenues dropped and we are no longer profitable and such.
How much did you raise in the B?
It's about 30 million.
Why did you decide that was the right amount?
So usually with the rounds, I always focus on the dilution, obviously. I think that's like the main thing you want to control ideally. And
what dilution are you happy with per round?
Well, I think it changes per round, but I think it's as low as I can get it, or as low as it makes sense. So, I mean, I think like I've never been happy with the 20% dilution, for example. I would rather, like even in the earlier rounds, I would rather see it at like 10% or less than that.
Can you get Sequoia for 10%?
I don't know, like you have to ask Sequoia that, but I think that I think it's possible if you have the leverage to do that. The thing with Sequoia is that they did invest in seed and Series A. And like one of the reasons we did the Series A with them is that we could push the dilution lower because they already have ownership. So it's like one of those things you can optimize for. I don't go super hard on optimizing on any of these things. So often it's a matter of like, what do we think is like reasonable valuation in terms of our progress? So I'm not trying to aim, like get the highest valuation possible. I think it's dangerous, and what we've seen in the past couple of years that it can lead to down rounds, and those are really annoying or unmotivating to people. So I want the valuation to be good, but not something that it adds like overly a lot of pressure, or like we get ourselves kind of locked into this valuation gauge, and we can't do anything anymore. But I'd rather see like a good progress on the valuation that and then like push down the dilution to the level that it still makes sense to the investor. I want the investor still to be engaged in the business and not just like, well, I bought 1%, I don't really care. But I think it's depending on the round. I think it should be enough for them to care, but as low as possible we can get it.
Should founders have a board from seed, from A?
I would personally, I think like you shouldn't have a board at seed, and I think probably you can raise a price round. I don't think you need to. You can do a safe round at seed. At a Series A, you can think about it. I do think it's like us, like we added the board to the Series A. I feel like it's kind of like a standard thing where I think it's I don't know, in some ways it feels good governance to have someone outsider there. And then I think with the Series B, we added another board member to kind of get two different perspectives in the board meeting. So we just don't have us and then one investor, but we now have two investors and then us. But I would say like on the board seats, I would definitely think about controlling them or having a little bit more. If you're a solo founder, you probably should have more seats or some kind of more voting on those seats. We have 3 founders, so it's been like kind of working out that way. Like we can have 3. We negotiated to have 3 seats from the beginning, and the VC can have 1, and so we can like retain the control of the board. But me and like even our legal counsel, I don't think some of these tricks don't really work that well anymore. And I don't think I saw this interview from Parker Conrad, and I think like he said that the only real protection you can have as a startup founder in your business is to be successful. If you're not successful, there's a lot of ways. It's not about the board control. It doesn't really matter. Like there's a lot of ways investors can exert their control, and they're professional. Like they have much more experience in that than you have as a founder. And so the real protection you can have is just be successful and not overthink these different terms or controls you can have in the legal like framework.
What was the single best investor meeting that you've had, Karri?
To me, it's always if people come in informed and they kind of get us and they're willing to go deep or talk about things. And that's something like I do with this fundraising process, is that like I don't like going very broad with the process. When we see that there's a good time or reason to do a fundraise, I usually have a list of people that I know or heard from folks.
How long is the list?
I mean, the list can be longer, but usually when I start the process, it can be only like 5 people that I want to talk to. And they can be a little bit different kinds. Some of them maybe are solo investors. Some of them are tier 1 investors. Some of them are some it's a specific person I've heard about.
So when you have that list, a lot of people are told always be raising. You need to continuously build relationships between rounds. How do you feel about that?
I mean, I would say like absolutely not to be always raising. I do think that as a founder or CEO, you should always think about the next round or what would make it good, or what kind of ideally, what would you want to get out of it? Like what kind of person would you want get in? And obviously if you do need the money, then you also need to think like when is a good time to do that like you still have good amount of leverage and the momentum in the business is good. So I think like there's this background process that you need to run every now and then. Like you don't have to think about it every day, but maybe every quarter or every month or something, that just think like, is there something I should do or think about the next round? When is it going to happen? Like what should I prepare for that? And I do meet with some of these investors, even though I'm not fundraising, but they're often very casual chats. And I just want to get to know the person a little bit. So when the time comes that I want to run this process, I already have some level of relationship there. And then we can just go deeper into what kind of investor they are and like their questions and my questions and that kind of stuff.
Which investor do you not work with today that you would most like to work with? There's
definitely the question even in my head still that's like, do we need to raise? Like, is this it? And is there some, I'm being kind of like researching, are there like different ways of doing this? And I think like, for example, if you don't need that much primary capital, you could do more like a secondary capital. You can actually build this more into a little bit like public companies where your like the team's equity in the business is a little more liquid, that you could have more of the secondary opportunities with the team. And that could be a good thing for the team, that they can actually feel like the equity is worth something and not just like a paper ticket they have that maybe one day will turn into something. So I think there's that question of like, do we even need more investors in the business? We actually have quite a lot, and like they are good. And so
you said earlier about the kind of investor shortlist. When we chatted before, you said about putting VCs to work and giving VCs homework. What did you mean by this? I'm not often given homework, Karri.
I make a separate Google Doc for each investor and say like, hey, here's a memo, and here's a like, at the end of the memo, there's some questions for you that I would like you to think about. And then they should write them down, and then we should talk about those answers. And to me, what it gives me, it's a little bit like simulating the relationship of working with them. And I can see the answers themselves might not matter that much. It's more about I can see how they think and what their style is. Are they more tactical? Are they more high level thinker?
What are you looking to see?
Yeah, actually, I don't think there's like a specific thing I want. It's more like, do I like this style? Like, I would say, like, for example, what I don't like is overly benchmarking or following like playbooks from other companies. I feel it's almost like it's templating the business. Like, you are not really thinking about our unique challenges. You are applying this template from somewhere else. So that's one thing I don't want to see. But in terms of like what they actually do, I think it can vary a lot. And in the end, it's more just when we go through it, it's more like the feeling I have. Do we speak the same language? Do we think? It doesn't mean like we have to think about the things the same way, and that's not the goal. It's more that does this way of communicating or thinking seem productive? Like, do they get our values or how we do things, or do they not? And did they completely miss that? So it's like I'm just looking like for a fit, and that fit can look different.
Karri, what advice do VCs give that founders listen to that you think is most dangerous?
VCs tend to push you to hire more leadership people, but then it's not always the right time, or it's also tough to find the right person to, like, at least for me, I'm again looking for a fit in that leadership role. So I think there's way too much push on like hiring like especially like business roles, like hiring a VP of sales, hiring a CRO, or hiring something where it's never, I always ask like, what are they actually going to do? Like, what are they actually going to change? And then usually there's no answer because they don't know what they're going to do. And the people themselves don't know. They come into the company, they start doing some stuff, and maybe, hopefully, they will do something productive.
Are there any questions that you ask when identifying talent that are common across different functions? And so, like, I always ask, like, talk to me about your relationship with your siblings. It tends to be the opposite of how they view themselves.
I like to ask people, like, what they're really proud of, like, what is something they built that they're really proud of.
What do you want to see in that answer?
First of all, I would like to see that they're proud of something, that they actually care about something, and they could articulate why they care about it. And then I think again, it's not what it is, but it's about like how they talk about it. So I think the people who really care about their craft, whatever role they're doing, they always want to go beyond what is expected or want to do it better than expected. And that's what I'm looking for in that answer. People who really are passionate about their craft or want to do it well, usually their answers start to sound more like these projects are almost their children. They start kind of lighting up, they get emotional, or they get much more nuance on like what they build and why. And then people who don't, I think, care about the craft as much, their answers are more flat or more factual, where it's more of I did this and it worked well. The impact was there. It was successful. So to me, that's like the interesting thing to look at. Like, do they want to go beyond? Can they think beyond what is expected or standard in this job or role? Can they come up with something even better? And do they have that motivation to do that? And so it's like I look for that craft in that question.
Karri, what are the biggest hiring fuck ups you've made?
I feel like we haven't made that, because we do take our time of doing this vetting, and we do have interviews, and we do have this work trial, and I think it works really well. There's only a few people we had to let go. There's only a few people who have left the company in this like 5 years. So I think it has been working quite well. I think every now and then it's probably always comes down to hiring someone that you weren't kind of like strong yes about. It's a little bit of that pressure of, hey, this seems good enough, we should go forward with it. And then usually you end up regretting it. The moments we had to let people go was that we kind of forgot that and just hired someone because they were fitting for the role, but we didn't actually feel the special sauce in there.
What do you say to founders who say that's great, but like I need the role today? Like that's super idealistic world. I need this seat filled.
If it's your first 10 people or even like first 15, 20 people, it's much more important in the early stages. Every role you hire, it affects it impacts the culture a lot. It potentially sets the standard for the whole function. So if you hire your first marketer, that first marketer is going to be the standard of what marketing is for the years to come in the company. And if you hire your first engineer you hire, that's also sets the culture of the engineering, or the first designer you hire. So I think I would definitely not ever do that in the very early chases. Like you just as a founder have to do the job until you find someone who is really good at it, or like you find that right person. At the later stages, when the team is a little bit more there and it's maybe like less impactful role, I think there's more of I like to think there's more like upstream roles and downstream roles, like how much those people might be affecting. Like if they're more upstream, they affect everything downstream. So obviously like leaders or some like, for example, product people, they're affecting the whole product organization or the whole product quality or direction or something. Those people have a lot of downstream impact on the business or on the company, versus someone who is more on the end of the spectrum, or like at the end of the like more like the downstream, where for example support is it's like we want to do support really well and we want to hire really good support people, but it's also the support doesn't impact everything in the company. So I think there is some nuances you can find that like why maybe it makes sense to sometimes fill the role versus like just wait until you find the right person.
Karri, where are you insecure in your role today?
It comes down to the CEO role, that I feel like you can be insecure all the time because that role is never the same. You can never be, I think like you can never be the best at it. The company is always changing, the team's changing, the market is changing, everything's always changing. So what you did maybe well in the past and it was good or well done, it's not enough anymore. The company is now bigger. You need to do something differently. You need to do something better. To me, the insecurity is always about that am I doing enough? Am I doing it well enough? Should I be thinking about the next thing? Should I be focusing on today? Should I be focusing on the future? The answer is both. And so I think there's this constant, and it's not every day, but every week I'm thinking about it's like, am I doing a good job? Like, should I be doing something less? Should I be doing something more? So I would say it's just like a nature of the CEO job, that I would say like nothing is ever enough. There's always more you could do.
Do you think becoming a father changed who you are as a leader?
I think there's some aspects probably like I think about more as like your influence on your children, and like what you say or do is they might learn that same thing. And if you say something or talk in a certain way, it might influence them to become something, or they kind of like pick it up. So I may be like more conscious now of what do I say to the company, that because like whatever I say or do might influence them in a certain way. It's not like I'm telling them to do something.
My mother always used to swear in the car. And so as a result, I have one of the worst mouths ever. And I just blame her in perpetuity for it. So I completely agree with you for being concerned about that. Final one, I'm intrigued. How do you feel about angel investing as a founder? A lot of other founders do it. How do you feel about it?
I've done it a little bit, and maybe I would like to do it more. I think as many other founders say that it can be very time consuming. Just like reading the email and trying to like evaluate this business, like, is this something I should be focused on? So my criteria is now just very simple or clear, is that do I know this person? And then do I believe what they do, or in this kind of product category or something? And then I might like invest or might not. But it's like, what I like about it is that you can see how other people are doing, building their companies. You get this investor updates. You can see, and sometimes you talk to the founders. you can kind of learn a little bit of how other people are doing things, and that can give you some ideas too. Like even if they're like earlier in the process than you are, like in the stage of the company than you are. So I like that aspect. I don't like the deal flow filtering or figuring out which companies to invest. So now I just try to focus on, do I already know this person and I want to support them, or do I really believe in what they're building and I want to support that?
And after this, you get a flurry of angel investment requests. Sorry, man. that was a really unfair one. Listen, I'd love to do a quick fire round with you, Karri. So I say a short statement. You give me your immediate thoughts. Does that sound okay?
Let's do it.
What are the biggest ways that companies fuck up remote work today?
Not thinking that it is a way of operating and just thinking that it's something like you can keep flipping back and forth. Like you have to build the whole company around being a remote culture and not just decide one day that, okay, today we're remote, and then a year later, like we are no longer remote.
In the linear journey, what did you not do that with the benefit of hindsight you wish you'd done?
I actually think like we did the right thing, but for example, like bringing in sales earlier, and this is credit to the investors. The investors are saying you should bring a sales in. Like this is the time to bring the sales in. And for us founders, we're like, no, we don't want, like, I don't think it's right now. And I think we had to go through that pain of, we started realizing, oh, there's a lot of people, actually, companies wanting to talk to us, and realizing, do I want to be the salesperson like 100% of the time, or should we like hire someone to do that? And then we realized, yes, we should hire someone to do that. So I think in the end, we could have done it earlier, but in hindsight, it was also that I think it was important for us to like learn that lesson through pain and not just do it and then constantly think about if the sales is the right thing or not.
What do you believe that most around you disbelieve?
I think it's just that the quality and doing things well still matter. It seems to me when I look at the market, or just me personally buying things, that today it's really hard to find quality things. A lot of things or products are marketed really well and they can seem like they're high quality, but then when you actually use them, you're disappointed. And I think there's some kind of power that if you actually do things really well, it is rare and people will notice and people will talk about it. It's like all that viral products on Instagram or something. Like I think usually there is some quality aspect to them that people get interested about. Sometimes they're not, but sometimes there is.
What thing of quality do you do today at Linear that you will not be able to do at scale?
I think one thing is me personally looking at every project, the design or when the team is building different features or different projects, I follow along, and when I start seeing them appearing in the app, I internally start playing around with them. I start trying them out. And before it's like we don't have very complicated processes, but usually before we launch anything to everyone, I or the other founders will do some kind of check on it. It's like, does this feel good? Does it feel right? Are the animations correct? And like those like little details are correct. So I don't think I'm not sure if we can keep doing that, or it's fully scales. And even now it's hard. So I feel like it might be something hard to do when you scale the company more.
What product other than Linear do you use and go, ooh, quality?
I think something I use a lot is Superhuman. I think it gets the right things right. It's fast and it has the features that I need. Like I think it's like the intro thing where you just hit the Shift I or something, and it's kind of does the PCC for you, and those kind of things that you do constantly. Like in this job is there, and no other email client really has it. To me, it's similar to Linear. They build it. It's more purpose built. It's purpose built for people like us, and it's not maybe the best email client for every single person out there. But I do think it's like the best email client for me, or maybe for you as an investor.
What recurring event on your calendar do you wish you did not have?
I actually went through my calendar and I couldn't find anything. I think it was interesting to see that. I think seems like we're pretty good at not doing things that I don't want to do, or the recurring events I don't want to go to. So I actually couldn't find anything.
What blog post written post 2000 is your favorite?
I like a lot of Paul Graham's essays. I think they're the classics, and I think going back to this like profitability, I do like his blog post about ramen profitability, and this, I think this was written maybe like a decade ago, and I always thought like that's the ideal way of building a startup, that you with being profitable gets you the highest leverage you can have in terms of when it comes to talking to investors, because it gives you the leverage of not needing them. That's his point in the essay too. And so that's always the highest leverage, if you can walk away from any deal. So I always loved that. Like, it wasn't an explicit goal when we started Linear, but when we started seeing, it's like, oh, this is actually possible, and we can kind of project or forecast how is this going to happen. We did get excited about it. It's very motivating and freeing to be in that position.
What was the worst investor meeting you had?
I don't want to name names, but I feel some of the larger funds, like, going in there, do the pitch meeting, everyone's silent, no one has any questions. Those kind of meetings, there's maybe 10 people in the room. You don't know who you should be even focusing on. Like, it's not very
human.
It's like you come to this audience, and then that audience is passive, and they don't have anything. Like, they don't give you any signal, they don't say anything, they don't ask much anything. So it just feels very like, why am I even here? It's like, which makes me think like I shouldn't be here. It's like, this is not where I should be. And so I don't like those kind of, like, I had some of those, and I don't like them.
Would you sell the company today for $3 billion?
There's a good chance I would, and then there's probably like a good chance I wouldn't. I think today, I think the default, I think it would depend a little bit of what happens after, like who is buying, like what's the story there? Can I get excited about that story? But if it's just that, okay, sell the company, shut it down for $3 billion, I don't know if I want to do that. So I think the answer today would be, by default, would be no. But if there would be some reason that we could see that, oh, this is really exciting, and we could actually do this thing better or something with some other organization, it could be like interesting to look at.
I'm asking the really spicy questions. I saw that Jira started advertising against linear searches. I think you tweeted it, or someone in Linear tweeted it. Does a company benefit from having a common enemy? Someone to go like, we're fighting against you?
I think it does.
Yeah.
It gives you a little bit of it's sometimes if you don't have that, you're not sure which directions are bad directions. So I think like when you have a more of an enemy in the market, you can kind of think like, well, we should do differently what they do. Like, we should actually go the different direction from them, because anyway, I don't think it's worth building the same product again. So there's this product out there, it's very well used. So what we should do is we should still solve the same problems, but we should do it very differently from them. Not everything differently, but some things differently. And that's like where the value can be. The value is not there if we just try to like copy what they do and do it like slightly better.
Final one for you, Karri. I've so enjoyed this, but final one for you. What question are you not often asked by employees, by interviews, by investors that you feel you should be asked?
Maybe a lot of times it's the why. I like why questions and in different topics, but I think the one question I would like to ask more is the why building a product that people want to use in an enterprise is meaningful. Because there's like a lot of focus in the market, or even the buyers or the customers, or there's always like looking at the features or looking at something else. And that it's more about what can I easily see on a website or something, or in my comparison chart that some product does more or less. But it's hard people don't ask about like, what is the most important thing actually? And to me, I think the enterprise tools or collaboration tools in enterprise, that the most important thing is, do people actually want to use this tool? And if they don't want to use this tool, like if they do want to use it, they will use it more. All of the things will work better. If they don't want to use it, it's almost like you don't have the tool anymore. Like the value is not there if no one is using it. So I think people yeah, don't ask that why question enough.
I think the fastest way a company can lose credibility in a fundraise is when they do the quadrant on what features they have versus competitors don't. And it's like Microsoft, and it's got cross, and then them for green tick. Like, I don't know. Like, seems like a stretch. Karri,
Yeah,
listen,
the last thing, the last thing is I really hate those comparison pages companies do. Like, if we never done those, because I feel like it's not honest to do these pages. Like, they're never objective, like linear versus X tool, and the X tool is obviously making it. So they're always wrong, even on a factual basis, like the features we have or don't have. And it's these comparisons charts I just feel like it's so dishonest practice in the industry, but everyone is doing it. But that's something like we don't want to do.
It's also predicated on the wrong things. Like, you're not explaining why you should even need them. Maybe you don't have the features because you don't need them, and it's feature creep. And so I totally agree with you, Karri. Dude, I so appreciate you working with me now, accepting my money. I know not many people have the luxury of being a linear investor, so I'm so grateful. And you've been fantastic. So thank you so much, man. This has been such a joy.
Thanks, Harry. It was great to be here.